Hello, everyone, and welcome to this episode of Coffee with Carl. I'm your host, as always, Carl Zoellner, one of the attorneys with Anderson Business Advisors. And today I wanted to take a couple of minutes and just look at tax brackets. So currently, I've got pulled up on the other side of the screen here the 2024 tax brackets, and wanted to talk a little bit about how they work. It never fails around tax season. People come in and want to know, well, what's my tax bracket on these things? So I want to talk a little bit about this is basically your earnings tax brackets. So single, you see on the left column, not the far left, but the second one, there's single and there's married filing jointly. That's sort of the most common, I guess, makeup of most tax filers. So you're either single or married. Um, it's kind of a no crap statement, but let's see here on the tax rates. How do they work? So basically, what I wanted to look at is when we look at the 0%, and I'll just put my cursor over here so you can see it as well. When you look at the so 10%, so if you're making anything up to $11,600 as a single person, then you're being taxed at 10%. Okay. So as we go up, you'll start to see how that factors in. Okay. So as we go up, at 11,601, that percentage changes over to 12% when we start looking at what am I paying between 11 and 47,150 as a single person. And you can follow along in the married column as well, by the way. You don't have to follow me here exactly in the single area here. Um, I'm married, so I'm actually in the married column as well. Um, let's see here. This one, so yeah, between 47 and 100,000, basically you would be at the 22% level for that portion of your income. I guess that's the key piece here that people don't really understand is they think, okay, so if I'm in a lot of people you get to, if they're in the 32 or 35% range, they think the entire thing is the 5% or 32. And it's not. It scales up. So if you look at this, I view it like sort of like a ladder. You have to hit the different rungs, and between each rungs is that gap in the ladder. And basically, that gap is this amount you see on here. And so when you're in that amount, that's the percentage you're paying until you hit the next level. So as you move up the ladder, like I said, it's sort of chunks that are going at that percentage. Doesn't make you feel any better at the end of the year if you're, say, down in the 35 or 37% range because you've paid a crap ton of taxes. But ultimately, it's proportionate to what you've earned. So that's just an FYI there. So as usual, thank you everyone for joining me. Please keep taking advantage of all the free content out there. And remember to like, subscribe, and share all of the Anderson Advisor channels. We love educating. That's why we create content. But we need to know you're taking advantage and liking the content and sharing with friends in order to sort of justify the time that goes into these, because there's a whole department that puts in a lot of hard work to produce these things once we've sat and just recorded them. So please continue to like and subscribe and share with all your friends, and we'll continue to record. So thank you all so much. And like I said, I'll catch you on the next episode, and we'll do some things on short and long-term capital gains. Thanks, everyone.